right. Greed works.
Hello everyone, and welcome back to the second half of episode 11 right here on the RakeM Shopping Network. In the last episode, we put together a plan to expand our presence into 80% of the market. We had $3.2 trillion to spend. We've spent $1.2 trillion so far. And I was concerned at the beginning of the episode that we weren't going to have enough money to make it all the way to that 80%. But it looks like that we're not going to have any cash problems at all. We may actually enter every industry in the game. If that's the case, we're going to pick up some more insurance companies and transfer some of my stocks that I'm holding into those companies, etc., so that we can continue to buy. But in any case, we have a plan, and the plan is right here. Actually, the plan is right here. And we just finished with pharmaceuticals, I believe it was. Yeah, pharmaceuticals is where we left off. So up next is U.S. electric and gas utilities. That one is in the gray, so we can buy any share of the market that we want. The earnings report is due for the bank, but we're not really paying attention to earnings report right now. We're just trying to get through all of these purchases. I want to use up all of this cash, and if the bank runs out of money, we will just cash in the mortgages and consumer loans to cover the difference. All right, so next up is the utilities. All right, and I'm just going to go through, and whatever is reasonably priced that we can buy a majority share of, I'm just going to go ahead and buy all of those and merge them together, modify their management settings, and reduce their debt to a 3-to-1 ratio. So I'm going to do that now while I fast forward, and I'll be right back. Okay, so we have Southern California Edison. We merged it with several companies. It's now an 8.4% market share. Its management, though, is very incompetent, so I upped their R&D spending to 8% to match this one, I mean. Idetics, I think that is. So our return is kind of low, but this industry is recovering right now, so it's going to be fine for right now. I also contributed the stock to the bank in accordance with my plan. So we're ready to move to the next one. But before we do, I want to go through the stocks that we have already and make sure that they don't have any interest rate swaps. And I want to eliminate any of them from speculating in any commodities. So I'm going to fast forward now while I get rid of all that on all of these companies. I'm glad to have that done, because there's nothing worse than buying a bunch of companies and then having interest rate swaps or commodities that you don't know about that end up causing you, grief because you weren't aware that they existed. So, speaking of commodities, I, at the end of last episode, shorted oil, and I redid some wheat. Bought some wheat, and it looks like gold is dropping, and if it gets below 1,000, we're going to probably buy some gold futures as well. But anyway, something I wanted to mention about the bank. It doesn't look like we're going to run out of money, but if we do, it's going to be at the bank. So what I'm going to do is I'm going to bring this bank's total up to even with me, because if Nippon does an extraordinary dividend, which it probably is going to, that cash will come to the bank. So what I want to do is I want to reduce both of these down to 500,000 flat. So I'm going to do that now. Alright, so now we've got enough cash, and if we have to do that again, we will. We will end up, investing in more consumer loans and mortgages later on. Because we're going to run out of business loans to buy. So once all of those are bought, consumer loans and mortgages are the only place to go. So, unless there's bonds to buy. Speaking of which, the interest rate has gotten up to 9%, and it's tightening. So we need to start keeping an eye on it again. Okay, and we're going to just ignore your earnings reports for right now. We got to get through all this buying first. All right, so next up is electrical equipment. And it's the same thing with like AOL has some subsidiaries, Warner Brothers, Time Warner Cable, and Turner has CNN as a subsidiary. We'll deal with those when we get done with buying. And there was a couple others, but anyway, we'll deal with all of that when we get down to the bottom of our plan. So whenever we get down to here, we'll address those, or if those stocks are in one of these industries, we'll address it then. But it looks like we may actually go all the way down to the bottom of this list, but we'll deal with that when we get there. Okay, so electrical equipment. This one is red, so we got to get a 25% market share. And looks like we'll be able to do that without too much trouble. If GE isn't already 50% of the market, well, he's right at 50%. I don't like that. Let's see. If we buy these three and set them all to -10, we could probably immediately sue him 3 times. Question is, do I want to do that for this amount? Well, if any of the 3 are successful, it's worth it. Alright, I'm going to do that. I'm going to buy all 3 of these. Rather than merge them, though, I'm going to just make Hitachi and I forget which company this is. I'm just going to make them subsidiaries of Siemens, have all 3 of them sue GE, and then adjust their management. Eliminate dividends, -10%, and over here just 3% on all 3 of them. Alright, so I'm going to do that now and while I fast forward, and I'll be back when I'm done. I forgot to turn on the video at the beginning of that buying spree, but basically I bought Siemens, Hitachi, and Philips. I put Hitachi and Philips underneath Siemens. I adjusted all of their management parameters. I got their debt ratios down to 3-to-1 or better, and I had all three of them sue GE for antitrust. GE currently has a market share of 50%, which is the threshold for success, and I didn't merge them so that I could have 3 bites at the apple. So if any one of those 3 manage to succeed in their antitrust suit, GE will have to probably sell off some of its subsidiaries or go into more debt or whatever the case may be, so that it will slim down or continue to slim down for a longer period of time. But as soon as Hitachi and Philips conclude their antitrust, however it comes out, that's when we'll liquidate them. Alright, so next up, wait. First we need to make sure that they don't have any interest rate swaps and commodities. Alright, so next up, wait, still, I'm trying to go too fast. Alright, so Siemens, the electrical equipment is supposed to go under who? Electrical equipment is supposed to go under Swiss Reinsurance. Okay, so I need to contribute Siemens to Swiss Reinsurance. Alright, so alright, now we're ready to go on. Storage technology is in what industry? Computer? Alright, we have a company there, Lenovo. So let's have him buy that. And liquidate him. Alright. Next up is network and telecom. Alright, so I'm going to go through here, buy what I can, and do I have to have a certain percent? Nope, he's in good shape. So, I'm going to fast forward now while I do that, and I'll come back when I'm done. RakeM was the only company that was affordably priced, but there was a couple others that we may inherit from the bank, namely Corning, and we might get Nortel Networks as well. But the thing to do now is to go ahead and sue Cisco, because he has a 51% market share right now and he's growing like crazy. So we're going to do an antitrust suit against him. Oh, he already filed, I guess. Okay, well that's too bad. Alright, so let's make sure he doesn't have any interest rate swaps or physical commodities. Alright, and he is supposed to go under Swiss Reinsurance, so let's contribute him there. Did I get that right? Yeah, network and telecom. Okay. Alright, so next up, chemicals, commodity. And he's in yellow, so we want to get a big market share if we can. Alright, so there's 16. And I need to check and see what percentage these are owned. Alright, so I'm going to consolidate what I can here, and I'll come back when I'm done. We merged a whole bunch of them into Dow for a 36% market share. I eliminated his dividend and changed his growth rate from -10 to -5, because I figure if he's, well, DuPont, I think that is, DuPont, if he's growing at -10 and he's earning 23%, then if we reform our management, which is right now mediocre, we should be able to climb up to the 20% range. So I reduced it to -5 to be more in line with the growth rate on the industry. Alright, and I already checked, he doesn't have any interest rate swaps or commodities. So while we were doing that, the bank inherited some stocks, and so we need to deal with that before we move on to the next industry. And the interest rate has climbed to 10%, so if that keeps going up, we're going to do some more swaps. Alright, but in the meantime, MediImmune is in biotechnology, which I don't think is one of the industries we're going to re-enter. Where's biotech? Way down? Way down here. So we're just going to go ahead and sell that one off. Where did we leave off? We were in chemicals, right? Okay, so let's have the bank just sell MediImmune. Alright, now Texas Instruments is in semiconductor. And this is us, and we own him, or RakeM owns him. Oh, and this is owned by Hitachi. Alright, I'm going to have ST buy these little ones, but I'm going to buy this one from Hitachi and merge them all together. I hope this doesn't take us up to like 50% of the market. I guess I should have checked that first, huh? Alright, so that's 42, 43, 44, 45. And we're growing negative, so, and we're going to be growing negative for a while probably, so that's fine. Alright, so we want to have a loan of about 49,000. Alright, so I don't trust my math anymore. 190 divided by 4, 47.5 minus 71. So we need to give him 23.5. Alright, 3-1. Alright, now let's check and see if we need to change anything management wise. -10, that's good. 4, that's good. 0, excellent. Exactly what we want. Still losing money, but gotta reform the industry. Alright, let's go back over to the bank and deal with that software company. Adobe. And we'll just have Microsoft buy it. Now, because they went through bankruptcy, there shouldn't be any interest rate swaps, but we'll just double check. Nope. Okay. I got physical commodities though. Oil. Oh heck yeah, I want to sell it. I bought it at 43 and the price is coming down, so let's sell it. Alright, Microsoft didn't inherit any. Alright, so was that it in the bank? Yep, that's all we need to do there. Well, it was almost all we had to do. Now we've inherited Honeywell. Honeywell is an electrical equipment. Down here. Alright, let's have Siemens buy him. He's too small to just like do the antitrust thing. I mean, he's not too small for the game. The game would allow it, but it's not worth the effort. We've got enough going on. Okay, back to the shopping spree. Last one up before we buy loans again. Entertainment and broadcasting. Now we already have some stocks in that industry. So 4.9, 8, 9.8, 9.8%. Looks like that's it. Alright, so these are going to go under Swiss reinsurance, if I remember correctly. Yep. So, I'm going to buy them from AOL as the parent. So I'm going to buy them from wherever I need to and put them under Swiss reinsurance. And then I'll adjust their management as well. So I'm going to do that and I'll come right back. Well, I didn't have to buy any new stocks. There weren't any to be had, really. We have a 10% share after combining Warner Brothers, Turner Broadcasting, and Cable News Network. We've got a decent return. We're reasonably competent, so I upped our R&D up to 7% to cover him. I changed our growth rate down to 3% because that's what the industry is growing at, and with these two guys growing negative, that'll improve our bottom line, and I eliminated our dividend. I contributed Warner Brothers. I bought it out from under AOL and its subsidiaries, and contributed to Swiss Reinsurance. So Swiss Reinsurance is getting a nice little jump in its stock investments. But anyway, our interest rate has jumped to 10.5, which is still not big enough, so we're going to proceed with buying our loans for the next group. So starting with Adolf Coors. And I'm going to fast forward through that, and I'll come back when I'm done. That's another $100 billion added to our loan portfolio. All right, so next on the list is air transportation. And we need to look and see what market share we need. All right, so we want at least 25%. So these two easily make 22, and that takes us to 25. So I'm going to do my purchases, adjust the debt and the management, and I'll be right back. So we merged those three companies into AirTran. We eliminated their dividend, we set their growth rate to -2, and upped their R&D to 8. They're currently mediocre, and we need that to improve. Reduce their debt down. Didn't quite make it to 3-1, but it's close enough. Because this industry is depressed, we want a little extra so that we can pay that down and increase our income that way. Of course, we're currently negative, so that shouldn't be that hard to do. Alright, so the only thing left to do is to contribute this to the company, the insurance company. And which one is he supposed to go into? Air Transportation, Swiss Reinsurance. So let's do that. And did we forget to contribute Dow? Where's Dow supposed to go? Yeah, he's supposed to go to Swiss Reinsurance too, so let's take care of that also. So how many stocks do I have? 1, that's 9, 10, 11, 12. Okay, that's how many I'm supposed to have. Alright, let's see. Next up is brewing. Let's check and see if the bank got any. Nope, didn't get any new bankruptcy companies. Okay, so 10.75. We need that to go up a little bit more. Gold is now below 1,000, so I'm going to go ahead and buy it. All right. Corn is up to 8. Let's cover our positions there. All right, and now let's sell it short. All right. So next up, brewing and distilling. Returns are good here, so it must be in decent shape. All right, I will go through here and find what I'm going to buy, and I'll come back when I'm done. Well, there weren't any companies in the industry that were worth buying, so I just created a new one, and I gave it 10 billion and had it buy 5 billion worth of new assets. We changed its R&D to 6% so that it will climb out of the basement management-wise. Currently, it's very incompetent, and having it grow at 4%, which is just under the industry growth rate. So we'll see how that does, and if any of these come down, we can always buy them later and merge them in. Okay, so next up, packaged foods. Oh wait, we gotta contribute him to Swiss Reinsurance, I imagine. Yep. So let's contribute him. All right, now we can go to packaged foods. All right, looks like these two. But I'll take a look, and when I get done, I'll come back and we'll go over what I did. Alright, so I bought Kraft, Kellogg, and Nabisco was a subsidiary of one or the other of them, and I didn't catch it in time, and so I ended up with a much larger share of the market than I thought I was going to get. But after I merged them, the other surprise was that Nabisco was trading at like 700% of his market share, and so now I don't want to buy the excess because I have to pay at least double or more than double what the stock is worth. If I do that, I'll have to hang on to it for like 10 years before I can quadruple my money. So we don't own 100% of this one, which is unusual for stuff that I do normally. So I couldn't contribute cash to him, so the only way to bring his debt down into the range that it needed to be was I bought Health Valley Foods, or whatever, what was it called? Health Valley Foods. I gave Health Valley Foods the money that Kraft needed in order to get its debt under control. So anyway, now that's done, and we need to contribute him. Well, first let's make sure he doesn't have interest rate swaps. And when we get done with this, then we need to contribute him to Swiss Reinsurance. Alright, and we need to eliminate all of this commodities too. He shorted gold, and I think it's going to go up, so. Now if his price goes down, the stock price will buy up the rest, but otherwise we're just going to have a 77% stake in this one. Okay. Oh, and regarding the growth rate, I don't intend to leave it there for very long. The industry is growing at -1%, and I primarily want to slim him down because he's got too big of a market share. So we're going to have him grow at a negative rate probably for the next 2, maybe 3 quarters, and then we'll raise him back up. Part of that is so that hopefully this price will go down. If it gets down to like 140%, we'll buy the rest. And the other part is because with the rest of these growing, the capital, the pre-tax return should stay about the same regardless, and I actually need to change this to 7% on the R&D. Okay. So that was packaged food, so household and personal products is next. And that industry is in good shape, so let's go there. Alright, a lot of these are owned. Alright, so I'm going to do some shopping and I'll come back when I'm done. Well, there were no companies in the industry that were reasonably priced and didn't have weren't already controlled by somebody. All these, they're all trading at too high a price. None of them are under 140. We might get Warner Lambert in a bankruptcy, so we'll get it that way. Otherwise, we'll revisit it later. So next up is hotels and casinos. And a lot of these are overpriced too. Let's see. Well, pretty much just him. Let's see what the situation is with the industry. He's gray. Alright, so let me take a look and I'll come back when I'm done shopping. So we picked up MGM Grand, Mirage, and Marriott, and we merged them all together, up the R&D advertising to 7%, reduced the growth rate from a negative 10 to a -3 to match the industry and eliminated the dividend. Got their debt down to 4-1 or 3-1. And just need to check swaps. And futures. And now we contributed him to Swiss Reinsurance, I believe. Nope, he goes to Hartford. All right. Next up, restaurants. All right, I'll do my shopping and I'll be right back. Okay, it turns out this is another one that we can't get a significant enough market share. This one is yellow. See, here's restaurants. It's yellow. And there just aren't enough companies to make up a 7 or 25% market share. These are all wholly owned by banks. They've already declared bankruptcy. So what we need to do is we need to just go ahead and buy their loans. So any future bankruptcies come to us, and we'll get a foothold in the industry that way. McDonald's is just basically killing everybody. So since we've gone down into this next group, I'm going to go ahead and have the bank buy up all of the remaining loans on the list. All of this group plus these two. And so I'm going to fast forward now while I do that. Alright, that's it for loans as far as the original plan goes. I'm tempted to buy all the rest of the loans for all of the remaining industries, but we're going to hold off on that. Alright, so next up, restaurants we couldn't get a large enough share, so beverages is next. And to make sure I'm good to go here. Yep. Okay, gold is still dropping, unfortunately. So beverage. Oh, looks like we'll be able to sue, I think that's Coca-Cola. Alright, so we can buy Pepsi. And doesn't look like much else, but we'll get him and him. This is RC Cola and FEMSA Bottling. Alright, so let's do some shopping. Well, unfortunately, we're not going to get anything in the beverage industry except any bankrupt companies that come along. Pepsi owns a significant share. Matter of fact, I think he owns 100% of Frito-Lay. And we own Kraft. And they're in the same industry. And if you combine the two percentages, it would put us above 54%. And so the antitrust laws will prevent us from buying Pepsi as a result. Alright, so next industry is pollution control. And it looks like Brown-Forman's probably the only one. Alright, so let me take a look at that and I'll be back in just a minute. Alright, this company was Browning Ferris, not Brown-Forman. But he's the only one that was affordable and not already owned. He's 100% owned. And Tomra is 100% owned. We'll probably get Vivendi in a bankruptcy at some point, especially with the interest rate this high. And he owns US Filter. So we just have to hope that he declares bankruptcy and we get him along with US Filter, and that'll give us a nice big market share. Alright, but that's it for this one. We upped his R&D to 6 to cover everybody else. Growth rate to 3 because I want to bring this up a little bit before I start growing any bigger. He's very incompetent right now, so once he reaches, reasonably competent, then we'll start thinking about growing faster. Alright, so all that's left is to check his interest rate swaps. Commodities. Okay, and contribute him to Hartford. Okay, next up, Auto North America, and he's in the green, or was, might be different now. Doesn't look like there's a lot here, but we can sue the pants off of General Motors. Alright, so I'm going to buy, I don't remember what this is called, but whatever this company is in Mazda USA, if it's not wholly owned. And I'll sue the pants off of General Motors, and I'll be back in a minute. Well, there wasn't much to do. There was only Sao Paulo, and Mazda USA was fully owned by JP Morgan. So I bought him, changed his growth rate from 1 down to 1 from 8, and upped his R&D to 6. He's grossly incompetent, I think, yeah. So we're probably going to have to go higher than that. So he's at 12, he's at 13. It's going to dig into our profit, but we can make a profit as high as 40% if we just reform the management. So let's change it to 15. It'll dig into our income for a little bit, but hopefully it'll fix the problem. All right. Let's check him for interest rate swaps and commodities. Okay, and contribute him to Hartford. Now he's only worth $7.5 billion. So I mean, we're getting down to where the amount of money that we're investing doesn't amount to much anymore. Of course, this is only a 2% share. So I mean, if it was a 20% share, it'd still be $70 billion. So maybe I'm jumping the gun a little bit by saying that, but I'm thinking that probably what we're going to do when we get to the end of our list is we're going to give some of this money to the bank and have it just buy up all the rest of the loans in the game. Alright, so next one up is Auto Europe, and we need a good market share in that one. And it looks like we might be able to get it, so let me take a look and I'll be back in just a minute. Alright, so I bought Volkswagen and Peugeot Citroën, contributed some money to Citroën and merged them together. Got its debt down, actually all the way down, after selling off its shares of Rolls-Royce. So Rolls-Royce down here was trading at 300% of his stock price, so I went ahead and took the profit on it and paid his debt all the way down. His management is somewhat mediocre, so I upped the R&D to 5%, which is above everyone else. Well, except for him. I didn't see that one. Let's make him 6. Okay, so all that's left is to check him for interest rate swaps. And commodities. Okay, and to contribute him to Hartford. All right. Retail Broadline is up next. And This one's yellow, so we want a significant market share. And all these are kind of high until you get down to here, and these are minor factors. So I'm going to do some shopping, and I'll be back in a second. So we got a little overly ambitious on this one. We ended up owning 52% of the market, or the industry, I mean. And we're going at a negative, and we're going to continue to do that until we fall below 50%. Our pre-tax return is okay, and I upped the R&D to 7 because our management is very capable. Well, I guess we can. It was lower than that when I first had Sears, but then when I merged May department stores, I guess it went up at that point. So I can back this off to like 4%. It had a bunch of swaps. I eliminated those. It has no commodities, so now we're just going to contribute it to Hartford. And I just noticed that Swiss Reinsurance has a dividend. I need to get rid of that. All right, we're almost through here. All right, last one up is healthcare providers. And he's in the green. All right, so Concentric Health, I guess, is the only one. All right, so let me do some shopping, and I'll be right back. Okay, so there wasn't much to be had in this industry. Concentric Health or Medical was the only one that was reasonably priced. And he was mostly reasonably priced because he was a brand new company. He's only been around for like less than a year. It was not in existence last year. But he's got a nice return, and his management needs to come up in his rating, but the industry is deteriorating, but we're a small factor in the industry. So I went ahead and kept its growth rate at 25% and gave it some cash so it can sustain that growth rate for a significant period of time. All right, so let's contribute him to Hartford. Okay, Now we could buy more stocks, but 20% of 150 billion is only, 22.5 billion. So these are pretty small industries from this point on. I think we'll get a bigger bang for our buck if we just simply give the bank $1 trillion and have it buy up the remaining loans. So that's what I'm going to do. I'm going to give the bank $1 trillion and have it buy up the remaining loans in the game. I did a quick calculation somewhere. Was it down here? Yeah. Alright, so far we have a loan portfolio of $3.5 trillion. But the difference between this number and this number is $2.5 trillion. But according to my list somewhere, this is what should be remaining. $1.4 trillion in loans should be remaining. So I guess all the bankruptcies have had a significant effect. So I'm expecting there to be about $1 trillion worth of loans left outstanding that don't belong to us yet. And rather than wait, I'm going to go ahead and buy them, and we can take over bankrupt companies in whatever industry they happen to be in. So that's what we're going to do, and we're going to probably finish the part when we get done with that. But I'm going to fast forward now and buy those loans, and I'll come back when all that's done. Okay, I think we're going to stop here. We've got $4.5 trillion in our business loan portfolio. We didn't quite buy all of the loans that were still outstanding, but we got the majority. Here's what's left. There's 1, 2, 3, 4, 5, 6, 7, and a half, 7 to 8 pages. About 180 companies left that we don't own their loans. But I want to keep a reserve just in case, the ones that we already have want to borrow more. I'm going to keep my $500 billion in reserve in case those industries that we didn't get to invest in. Where are they? Household and personal products. And there was another one, wasn't there? I think I failed to. There was another one, but I didn't mark it. Alright, so we'll figure all that out. We'll fill out the rest of the spreadsheet and do all that next time. But it's time that we get back to the business of running the companies we own. We've been neglecting them for almost 3 quarters now. Well, we haven't touched any of them since April. So it's time for us to get back in there and make sure that none of them need attention. And next time when we come back in episode 12, we're going to test out this autopilot and see how it works. Alright, so come back for episode 12, and until then, like and share, and have a good one.